A mortgage is a really big loan. And it's come about
Really?
from exactly that question. So, they say 47% of people in the UK, even people that have a mortgage, don't understand mortgages. And part of that is coupled with just the lack of financial. But one of the things that we will be doing is the Mortgage Ready Challenge. So we
Okay.
will be helping people situate themselves from day one to be ready for a mortgage as quickly as is possible for them. Okay, so we're going to go through all of the steps. We're going to show you how to build credit. We're going to show you how to manage your finances in a way that you'll be ready for a mortgage as quickly as possible, because there are lenders that will lend from day one and offer mortgages for skilled workers from day one in the UK. Now, those are very unique cases, but they do exist. So I would say the first time you should seek out a mortgage broker is as soon as you land, you're living somewhere, and have a job.
Hello and welcome. Today, we are so privileged to have Anthony Lindsay, a highly accomplished author and public speaker and expert at finance. His experience spans over 3 decades now and in the industry of mortgage and banking. Anthony has worked with banks in the US and UK. He is a licensed mortgage broker. He works with individuals who want to secure commercial and residential properties, especially the first time buyers. I would like to welcome you to the call, Anthony.
Thank you, and thank you for having me. I'm really privileged to be having this conversation.
Absolutely. So, our conversation today is going to be based on mortgages for the first time buyers of people that have just relocated to the UK. So, I've got two stories that I need to break down, Anthony. So, the first story is the imaginary person that we need to speak to. So, one of our the audience that are listening to this is someone who has migrated from Zimbabwe, precisely because I do come from Zimbabwe as
Okay.
a healthcare assistant, and we're looking at somebody who is a couple, husband and wife, and they've just started in the UK. And then the second person is a single parent, someone who is living alone with their kids, and then also someone who is a single person who is never married, no kids. So these are
Yes.
the three categories of people that we need to address throughout this session, and because that's where the majority of people um, are. That's the first issue. And then the second story that I need to tell you is that, you know what intrigued me to get to know you, probably don't know about this, but I just thought I should tell you about it. So, a friend of mine who just relocated to the UK slightly over a year ago sent me a message to say, "When are you coming for home welcome party?" I'm like, "Okay, what happened?" They said, "We got mortgage. How did you do that?" You know what? So they tried to explain that a lot of mortgage brokers they offer advice for free. Find a mortgage broker, and I ignored that. And then the second part was a friend of mine again bought a mortgage. I'm like, okay, what's really happening? I then spoke to a friend of mine, the third one now, who has been in the UK for a long time. I asked them the pros and cons for mortgages, and they say, you know what, I don't have any experience about mortgages, but you need to find a mortgage broker. So that term kept on appearing. They said, you know what, for them, it's all pros throughout. So I had these little questions that I have, and then another friend of mine sent me your flyer where you wrote to say mortgages for skilled workers. I was like, okay, this person is speaking to me. And I reached out to Anthony to say, can you tell me about your business? We spoke a little bit, and Anthony actually does a lot of good stuff. So to
Thank you.
kickstart our conversation, um, what is mortgages in UK and how do you explain it in simpler terms?
Okay, so I actually have a book that's coming out maybe by the time this airs, which is called A Mortgage is a Really Big Loan. And it's come about
Really?
from exactly that question. So, they say 47% of people in the UK, even people that have a mortgage, don't understand mortgages. And part of that is coupled with just the lack of financial literacy throughout society, not just with mortgages. But essentially, what a mortgage is, it's a really big loan. It's a bank fronting you or giving you the money to purchase a property. And one of the great things that I love about what I do in finance is numbers are numbers, right? So
Okay.
numbers are numbers anywhere on the planet. So it gives me the opportunity to help people understand the fundamentals that they can make informed choices. And I love that you kept mentioning brokers, because that's another concept that a lot of people don't understand. I've been in finance for over 30 years, and I worked for Halifax, I worked for Lloyd's, I was a area manager for several banks. And even me, as someone that was working in finance for a period of time, I didn't
Yeah.
understand or fully understand the benefits of using a broker as opposed to going directly to the bank. And I guess the key benefit of using a broker instead of going directly to a bank is this: choice. When you
Okay.
go directly to the bank can only talk to you about their products, right? So if you go into, any bank, you might have an amazing banking advisor, but they can only talk to you about bank X's products. So that means if you're a skilled worker or if you don't meet that vanilla profile of the ideal client or customer, they're going to say no. But it doesn't mean that you can't get a mortgage, right? And that's what has
Yeah.
happened, particularly in the skilled worker visa community. Someone's gone directly to their bank, to NatWest, Lloyd's, whatever. The bank has said no, we can't give you a mortgage. And they go out and they tell people, and they don't, it's not a malicious thing, but they're like, oh, you can't get a mortgage because the bank has said that if you're a skilled worker, you can't get a mortgage. The benefit of going to a broker is we brokers work with 20, 30, 40 different lenders. So when you come to us, the same process of providing information that you would do with your bank, you're providing it to us. But now we're looking at 30 different lenders rather than just one lender. And if you are upfront and very clear with what your situation is from the onset, an experienced broker like me, during the conversation, we're just filtering down to the lender that will lend to you. Because at the end of the day, it doesn't matter what somebody else can or cannot get as far as a mortgage. You want to know what you and your family can get.
I see. Amazing. There's a lot of terms that I've been writing down there, but I'll come back to that in the course of our interview. So now you mentioned a lot about your experience in banking, and I'm sure you understand numbers as you have said. So one of the most important questions that a lot of people are asking in terms of it's a big loan. So as a first-time buyer, someone who has just relocated to UK, how much deposit would they need for the first time? I understand there are different places where people can actually get these mortgages, but what's on average? What are we looking at on average?
Okay, I'm glad you framed the question the way you did, because it gives me an opportunity to unpack that
Yeah.
question and give you the best answer I can. All right. So, first
Okay.
and foremost, let's just look at when people are talking about averages and what, someone can get and what they need. Usually in conversation, people are talking about the vanilla client. All right. So, what I mean by
Okay.
vanilla client, that's the ideal client that you never get. That's the person with excellent credit, A. That's the person
Yeah.
with UK passport, B.
Yeah.
That's the
Yeah.
person with a 25% or more deposit. So
Yeah.
they have excellent credit, UK passport, 25% deposit. Pretty much anyone will lend to them. All right.
Oh,
So
I
this
see.
brings me back to when people talk about averages. Keep in mind, I'm in London. The average
Yeah.
house price in London, I think, is around 400,000. If
Okay.
you're talking about percentages and numbers, remember, numbers don't change. 10% of 400,000 is 40,000,
40. Okay.
right? The average house price up north might be 190,000. 10% of 190,000 is 19,000. So when someone asks that question, it's not really that useful for any broker to just give a number, because
Okay.
we have to first understand where you are, what the average
Yeah.
house price is, etc. So to just give a percentage is also unfair, because, as I said, if you're the vanilla client, you may be able to qualify for 5% down because you have a UK passport, good credit, and you have
Yeah.
access to 25%. But the moment you add or layer on anything that's outside of that excellent credit profile, you
Yeah.
reduce the amount of lenders and you change the criteria. The best thing, and people don't like this, and I probably lose clients, is I always say to people, let me know your circumstances and we'll work backwards. So let me know how
Absolutely.
much you have, what your visa status is, what your credit history is. And instead of me giving you an answer for the average person, I'll give you an answer for you and your family. Because that's all that matters. Because if I tell you, well, you need 5%, and then and your average house price is 19,000, so you come up with that money, and then you come back to me and you found the property and you want to move forward, and then I come back and say, oh well, that 5% was for Jake. It's
Oh,
not,
I
it's
see.
not useful. You want to know what you qualify for. So a broker, and you said something at the beginning of the call, Kuda, and I really appreciated that. Most brokers aren't going to charge you to have the conversation,
Yeah.
right? Yeah. So you can have the conversation, get the information that you need for you, that you can then make an informed choice. So in short, what is the average? Doesn't matter. How
Oh,
much does someone need? Doesn't matter. It's what do you need as an individual and as a family, and what can you actually get based on your circumstances.
okay. So you kept on mentioning the percentage value of, in your conversation, you spoke of 5%, you spoke of
Yes.
10%, and then you spoke of 25% given that your circumstances are good. I'm
Yes.
sure you mentioned 10% a couple of times. Can you just touch base on that in terms of, could it be the average amount of money that you can just calculate as a new person, or how does it work?
Yeah, that's again a great question. So the short answer is no. All right.
Okay.
So the short answer is no, simply because different lenders are going
Mm-hmm.
to have a range of different products. So right now, if we were to go into a fact find with a client and it's a couple, and we were to look at all the different products available for that couple, there might be 1,400 different products. There's probably
Okay.
7,000 different products on the market right now, right?
Mm-hmm.
So what you will find is the higher the loan to valuation, and I'll explain what that is. The higher the loan to valuation that you're going for, the fewer products there are potentially, and certainly the higher criteria. So what is loan to valuation? Loan to valuation means, and we'll just use the easy numbers. If
Yeah.
you're buying a house that is valued at 100,000,
Yeah.
right?
Mm-hmm.
If you were to pay down 5,000, right, that would be a 5% deposit,
Yeah.
right? That means the
Mm-hmm.
bank is only financing 95% of the loan. So the loan to valuation is the difference between how much the bank is giving you, the mortgage amount, and
Mm-hmm.
the value of the home. Now, keep in mind, banks are banks. They're not people that are looking at you as a person. They're looking at risk. Now, understanding that, in as far as history is concerned, the trajectory for houses is they
Mm-hmm.
increase in value. They do increase in value over the long term. They may go up and down, but if you look at a long term trajectory, the house prices go up. So a bank is going to look at risk. So they're going to say, well, if you've paid down 5%, so you now owe us £95,000, and the
Mm-hmm.
house prices go down and something goes wrong and we need to sell that property, we have a greater risk that we won't recoup our money, right? That's
Oh.
why they reserve those lower percentage down. In a lot of cases, they reserve it for more stable clients, good credit, established in the UK, etc. Whereas if you're going to pay down a 25% deposit on a property, so you've now paid down, instead of
25.
5,000, paid down 25,000, there's less risk for the bank because they're only lending you 75,000 now. If anything goes wrong, there's enough fat in there that they'll be able to recoup their money. So to come back to the original question, yes, even for skilled workers, there are deals out there that you can pay down 5%, depending, and that 5% is going to vary depending on the house price. So there are deals, and I have done that for people recently. Those three types of clients that you mentioned, Kuda, so the
Yes.
family, the single person with kids, and the single person without kids. In the past 6 weeks, I've gotten each of those customer types mortgages as skilled worker visas, right? So it can be done. But also keep in mind, products change with the market. So
Yeah.
they may pull those products at 95%, and then the starting point might be 10%. So they do
Okay.
exist, but I always caution people, let's look at you, let's look at your circumstances and see what we can do to help your family.
Absolutely. So now, you spoke about skilled worker visas. Okay, so I'm sure you do understand what a skilled worker visa looks like, because you have just mentioned that you've worked with some of those people. What sort of documents do the skilled workers, to be specific, you have to put together in order for them to qualify for mortgage? If you can just maybe list just a few, the critical ones.
Yeah, I can give you the full overview. And if I'm
Okay.
honest, this is usually where the delay is. So you have
Okay.
myself and you have even my team, all of the brokers in my team.
Yeah.
We can turn around deals fairly quickly. And the
Okay.
interesting thing that I find is not just with mortgages, but just in life. I think
Yeah.
we're used to delays and we're used to inefficiencies. So, quite often I'll have people see my post or see my Facebook or see something like this on YouTube, and they'll say, "Listen, I'm ready. I want to move forward." And then I have the conversation and I send them this checklist. And this is the checklist. This is what you are going to need, both as a skilled worker or even just as someone applying for a mortgage. First and foremost, you will need 3 months bank statements. So 3 months of your most
Mhm.
recent bank statement. So that means if it's March, you send December, January, February,
Yeah.
right? You don't
Yeah.
just pick the random ones that you want to send. You send the most recent 3 months. So 3 months bank statements. Now that bank statement that you're sending should be the bank statement that shows your salary going into it. All right. So 3 months bank statement. The second thing that you're going to need is 3 months pay slips. If you're paid weekly, then you're going to need 3 months worth of your weekly pay slips. And it has to be the most recent 3 months. So 3 months bank statements, 3 months pay slips. The other thing, if you can get it, is a P60. Because if you're a carer and you work varying hours, it may mean that your P60 might show a higher income than the average of the last 3 months, if that makes
Okay.
sense. 3 months
What is
pay slip,
P60?
P60 would be what the inland revenue shows that you made the previous year. So if you've just come here and you've only been here, like a year, you may not have a P60 yet. That's why I say if you can get a P60, it's a good place to be. So you can contact the inland revenue and you can generate your own P60. Okay, 3 months bank statements, 3 months pay slips. Now, as far as your residential status, you'll need to generate a share code. You can
Okay.
generate a share code online. The share code will start with an S. So you need to generate the share code that's related to residency, not the one to rent, not the one to get a job, the one to get a financial or apply for a loan or get a bank statement. It will start with an S. I have several videos that you'll be able to get in the description on the link on how to generate that share code. So what that's going to do is it's going to show your visa status, how long you've been here, and how long you have left on your skilled worker visa. All
Okay.
right?
Yep. That makes so much sense. So now tell me about, we come from an economy where most of our items that we buy them for cash. Does that make
Yes.
sense? So I'll be pretty honest. In Zimbabwe, if you're to own a house, the majority of people who owns houses, they would have paid the house for cash. I mean,
Mm.
you pay for the house today, and you know what? You move into your house, you don't owe anyone, and that's what the economy is like. So that's what we are used to. And when it comes to the mortgage aspect, is something that is completely new to us that we need to understand. And how is it compared to the rental that we most of the skilled workers come first and do compared to the mortgage? Can you just tell us the 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 ideas behind which one is, why is mortgage better, why is renting better, and things like that? Just do a comparison.
So this is a good thing for me to unpack and share with everyone. Listen, from the
Yeah,
moment you get to the UK, if your plan is to settle here and your plan is to buy a home, start to situate yourself from day one. All right. So,
yeah,
as you said, in certain cultures, it's not just your culture, but in certain cultures, there's very much a very cash orientated mindset. So, we do things in cash. Even
yeah.
my grandparents, like that was their thing. They're like, I'm not going to owe anybody anything. We do things in cash. The reality is, in the UK and in the US, you need to develop a credit history. You
Yeah.
need to develop a credit rating, which means you do have to borrow money. But what you want to do is make sure when you get a credit card, when you borrow money, you pay well. I will say, in my experience, most of the people from your community that I do mortgages for have amazing credit ratings. They've managed their credit really well. So there's positive things that are happening in the communication in that. So thing number one, you do need to establish credit. As far as renting, one of the great things is and I have a video on this as well, there are some schemes where your rental or your rental agreement is reported to the credit reporting agency. So, what are the credit reporting agencies? There's three: there's Equifax, Experian, and TransUnion. And these are
Hmm.
the agencies that monitor how you manage your finances. All right. So when
Yeah.
you apply for different types of credit, it's reported on your credit report. And there are schemes that your rent can help you build your credit rating. The other thing, and this is the elephant in the room, all right,
Yeah.
savings. I know that my parents are Jamaican, right? And in the
Yeah.
Jamaican culture, we have something called a partner. This is how a lot of Jamaican people that came over during Windrush save their money. So you'd have, like, let's just say, to keep the numbers easy, you'd have 10 people and you'd have one person who's a banker. And what that
Yeah.
person would do every week or let's just say every month, to keep the numbers easy again, everyone would give that banker £1,000, right? So then there's £10,000 in that pot. And every week someone would draw that £10,000, right?
Yeah.
You cannot do that in the UK. All right. So if that's how you're generating your deposit, it will be problematic when you go for a mortgage. And think about it. From a bank's perspective, this could be money laundering, right?
Okay.
This could be anything. And I'm not saying that it is. I'm just saying, think about it from a bank's perspective. One of the common and most tragic things that people do, and I can understand because finance is very personal. They think there's a person sitting in a bank looking at their credit report or looking at their bank statement and monitoring it. It's all algorithms and computers. I remember being a bank manager in retail, and customers would come in with their physical bank statement, with a transaction on the bank statement, say, "What's this? What's this thing on my bank statement?" And my staff is like, "Well, how am I? It's your bank statement. How am I supposed to know?" But
Yeah, of course.
I say that to say this, like, you have to keep in mind that banks are there to protect the society and to
Mm-hmm.
operate based on math. So when you're saving, to go back to your original question, when you're saving for your deposit, what a bank wants to see is that your salary goes into one bank account. You then transfer a certain amount of money from your salary bank account into a savings account, or that it stays in your current account. What they don't want to see is that £1,000 a week is coming from all these random places, Because how are they going to track that? How are they going to
Yeah.
know that it's not coming or it's not the proceeds from something illicit? All right. So when
Okay.
you're savings, make sure that you're saving. If you're getting a gift from someone, that's fine. A lot of lenders will accept gifts for deposit. Some lenders will require that it's a family member, like a sister or a brother or a parent. Others will allow it to be from friends. But the best way, if you're coming from day one and you're looking to get on the housing on the housing ladder very quickly, you get
Yeah.
your salary, you put that salary into a savings account that money can be tracked easily.
Okay. So now let's talk about a situation where, when a lot of skilled workers, when they come to the UK, they have what is known as cultural shock,
Yes.
right? So cultural shock will leave them with a lot of uncertainty. Okay. And when they would have left their homes back home, they've got dreams. Some of them, they've left their homes to say, when I go to the UK, I'm going to work very hard, and I build my house in back at home, or I
Yeah.
start a business back at home, and things like that. So these are people that are now at a crossroads whereby there is a cultural shock, which is something that has affected a lot of us in terms of learning the new way of living. Just like we're saying that, in the UK economy, you have to borrow, and that's affect a lot of people are facing that. And some of us have actually gone that and then bought their mortgages.
Yeah.
I mean, in the event that someone gets mortgage and still they are uncertain of what the future holds, they might be probably going back to Zimbabwe or back home to their home country.
Yes.
How easy is it to then dispose the mortgage that you just had contracted? Probably, let's say you get into a mortgage, you stay in UK for 10 years, you want to go back to your home country. How easy is it to then, sell the mortgage again to get your money back?
All right, so this is a really important conversation, and that's a really, really important thing to pull out. So, what your question is once you have a mortgage, how
Mm.
easy is it to dispose of that mortgage? Now, this is where you're going to want to deal with a really good broker. Now, when
Yeah.
I have conversations with people, because of my background, so let me just emphasize this one point. I've been in banking for over 30 years. Within that 30 years, I've done three distinct things. I've done wealth management, I've done lending, which is the mortgages, but I've also done collections, right? And I come
Yeah.
at it from a perspective of life experience, caring about my clients, and understanding what can go wrong. So when
Yeah.
I'm helping someone get a mortgage, these are the things that I would explore. These are the questions that I would ask. Not everybody wants to stay in the UK. Not everybody wants to stay in the US. The UK is cold, it's rainy, as you said, there's this culture shock, and it may be a great place to come, build up, experience something different, and then go back home, or build up and be investing back home, right? So all of
Yeah.
those things are great. But if you have a mortgage and you are planning on moving back or are at the point that you want to move back, if you've purchased the right type of property, it shouldn't be a problem. So a lot of people have been coming to me recently about, for example, shared ownership, right?
Mhm.
Shared ownership is absolutely amazing for the right type of people. But what I always encourage people, do your research. So do some objective research where you Google shared ownership nightmares. So you'll hear all the bad things. Shared ownership success stories. You hear all the good things, then speak to a broker. The challenge that you have is if you go into a property, for example, if you go into a property that is excuse me, a foreclosed property or a problematic property, when you try to dispose of it, or when you're not really disposing of it, you're selling it, you may
Yeah.
have problems finding a seller. So you might find that you've been paying on it for 8 years, the value has appreciated or gone up, and you should have some equity in it, but maybe nobody else can get a mortgage on it. Maybe you purchased a property that was below market value. And the reason why it was below market value is potentially if it's a leasehold and I'll explain the difference between leasehold and freehold. You may have purchased a property where the leasehold length is too short. So when you then get to that point that you're trying to sell it, no one can get a mortgage on it, which means someone wants to buy it cash. And anyone that's going to buy a property cash is looking for a discount. So to summarize your question and the answer, if you have a mortgage and you're looking to move back home, or you're considering moving back home, it can be done and it should be relatively easy if on the onset you purchase the right type of property,
Mhm.
and you've also talked to your mortgage broker and they've helped you find a property that when you're ready to sell, it will be easier to sell and people will want to buy it, and you'll have a lump sum of money once that mortgage is paid off. You'll have a lump sum of money to go back home or to invest in another property.
So now this makes sense then. Since our last conversation, I've been thinking to say if someone is to rent a property in UK, let's say, like I said, there's a lot of uncertainty, and then you find yourself 10 years in the UK and you're still renting. And that means if you decide to, move to another country, or maybe move back home, whatever reason, that means you just move back and you don't have anything to sell. But when it comes to committing to a mortgage, it simply means that you have got a lump sum of cash that you can recoup. Yeah, does that make
Yeah,
sense?
potentially,
Oh,
potentially, yeah.
okay.
And
Yeah, go ahead.
I was going to say, but and with that, do keep in mind, and Muzzy, who I think is amazing, guys. Everyone in this chat might already know who Muzzy is, but if you don't, make sure that you look up Muzzy, and I'll actually put his information in the description. Muzzy said something to me during one of our podcasts where he's like, when you have equity or value in your property, it's in your value.
Yeah,
It's in your property. So you can't pull a brick to buy a loaf of bread, right? And I love that because it's a good way of describing it. But if you're looking to move abroad and
yeah.
you have a property in the UK that you have equity in, you could potentially convert that to a buy to let property, right? So what
Oh,
that
okay.
means is you have a residential property that you and your family are living in. You decide to go back home or go somewhere else. You can convert that mortgage that you were probably paying a residential mortgage on. So you were repaying the capital and you were paying the interest. You can potentially convert that into what's called a buy to let property
Yeah,
and an interest only mortgage, which means, let's just say, again, keeping the numbers easy, you were paying £1,000 a month mortgage payments because it was a capital repayment mortgage. So you're paying down the loan. The amount that you owe goes down every time you make a payment. You can convert that to an interest only mortgage, and then you
mhm,
could rent that out, which would then mean, let's just say the payments, the repayments then go down to 500 because you're only paying interest. You're renting it out for 1,200.
yeah.
You're then getting 700 of a difference. You can have that money going into a UK bank account, or you can utilize some of that money in your next move. There's lots of options, but I think hopefully part of what your question is and what you're getting at is what value can you get at the
No, no,
point
no. It's,
you want to move.
yeah, it makes sense what you're saying. Like you're saying, there's so many options. I guess you are nailing it down to what is needed. So my other question is that like there's a lot going on, especially in terms of the money movement. Let's take um, a, a look at a couple. What sort of at which time should they engage a mortgage broker if they're considering to purchase a mortgage, and in the event that you are working with someone who has no savings at all, but they want to work with you and say, I want to start and I want to look at my papers and put my papers in order. And at a certain given time, once everything is ready, I'll be ready to purchase. So let us look at what sort of time frames are we looking at? Is it a year? Is it 2 years? Is it 2 months? Is it 6 months? What time frame are we looking at?
All right. So there's three key points.
Yeah.
The first point you should actually speak to a mortgage broker is the moment you land in the UK and have a job, right? that's when you should have the first conversation. That someone like myself, now not all brokers will want to have that conversation because they may view that as a waste of time, but me personally, I
Yeah.
want to have the conversation then and give you a blueprint, debunk the myths, and give you an actionable plan. So
Okay.
Kuda, I'm sure you'll build on this in your community, but one of the things that we will be doing is the Mortgage Ready Challenge. So we
Okay.
will be helping people situate themselves from day one to be ready for a mortgage as quickly as is possible for them. Okay, so we're going to go through all of the steps. We're going to show you how to build credit. We're going to show you how to manage your finances in a way that you'll be ready for a mortgage as quickly as possible, because there are lenders that will lend from day one and offer mortgages for skilled workers from day one in the UK. Now, those are very unique cases, but they do exist. So I would say the first time you should seek out a mortgage broker is as soon as you land, you're living somewhere, and have a job. The next point should be 6 months before you think you're ready, right? So six
Obviously.
months before you think you're ready. Why? Because there's certain things that we may need to support you with, tidying up, coming up with a better way of building your savings that will take 4 to 6 months to do. So, for example, if you've missed a payment on a utility bill or a credit card, that's okay. We can still get you a mortgage. But what we'd want to do is from the time we speak to you, make sure you don't miss any more payments. Or you may have some small credit cards where, because someone's given you misinformation, you're carrying a balance on it. So you have a £500 credit card and people have told you, yeah, you need to keep using it. That's not completely wrong, but we'll look at your personal circumstances and we may say, listen, pay the credit card off and don't use it for the next 4 months because it's going to increase your affordability. So the first stage you should speak to someone is as soon as you have a job and you're in the UK. The second
Yeah.
stage is 6 months before you're ready. And the very last, and I think it really shouldn't get to this point, is when you think you have enough, you have been in your job, you're settled, and you're ready to buy. That should be a last resort, because I do get people that are coming to me and they're saying, I found the house I want to purchase. It's £190,000. I need a mortgage. And then we go through this stuff and we're like, actually, you don't qualify for 190,000. Or conversely, you've qualified for 230,000. So go back out there and find the house that's actually going to accommodate your family. That, you don't have kids sharing rooms, or you don't have that study area or whatever. But I would say, in my experience, most carers are on anything between 25 and 31,000 a year. If it's a
Mm-hmm.
couple, the best way, and I'm going to give you a hint, and this is the trick. This is a rule of thumb. It doesn't apply to everybody, but
Yeah.
this is the math. You combine both salaries. So let's just say each person is on 25,000. That's a combined salary of 50,000. I'm
Yeah.
talking now about the family, the married couple, no kids, right?
Yeah.
Combined income of 50,000. You multiply that by 4.5.
Yeah.
Whatever that figure is, that's your base mortgage amount.
Oh,
Then
okay.
add the amount that you physically have in savings,
Mm-hmm.
right? So you add that amount, and that's about what you qualify. That's about the house price that you should be looking at. Now, this is a
Okay.
rule of thumb. Please do not start putting this on Facebook, on social media, that it's 4.5 times. It's a rule of thumb. The reason why it's a rule of thumb, depending on someone's age, depending on their profession, some lenders will lend up to 6 times your salary. Some might only do 4 times your salary. But a safe bet, if you're just trying to crunch numbers and you don't want to speak to a broker and you want to see if you're on the playing field, take your
Yeah.
salary, multiply it by 4.5, and then add the amount that you physically have in cash. And that's going to give you a range. And math is math, right?
Yeah.
So another myth that I want to debunk is I can't get a mortgage.
Okay.
Usually, It's not that you can't get a mortgage. You just might not be able to get the mortgage that you would need to realistically buy a house, right? So if you're on 25,000 a year and and you qualify for a mortgage of 125,000 and you have 10,000 to in savings. So that's 135,000, right?
Yeah.
You can go and look for a house at 135,000. But if you live in London, you might as well not even go on Zoopla or Rightmove because you're not going to find a house for 135,000. But that's different than not being able to get a mortgage. That means you can get a mortgage. You just can't get enough of a mortgage to realistically buy what you want. Now, same figures up north might be a little bit different, if that makes sense. So please don't tell yourself you can't get a mortgage because
Mhm.
maybe you can get a mortgage, you just can't get enough, which there is a distinction and a difference in that. But just speak to a broker, and listen to podcasts like this. Reach out to people like Kuda and Muzzy and myself and have the conversation that's specific to you, that you're not just having a hypothetical conversation. It's just like a man going to his doctor and saying, my twin brother's knee hurts. What should I do? Like, it doesn't matter what's going on with your twin brother. You want to know what your diagnosis is for you.
Yeah, of course, that's true. So now, my other question is that, you have answered quite a lot of questions, and I'm so sure that quite a lot of people out there have got a lot of questions. Okay, I'll tell you a story. Anthony does some monthly question and answer, and I shared his one of his question and answer, and it was actually sold out in no time. And a lot of people started messaging me to say, "We can we open more slots?" And Anthony was so strict to say, "I only work with 12 people," which makes it quite good because it's a focused community that it leaves no stone unturned. So what I want to ask is, how can people connect with you? What sort of information do you have on your plate that they can plug into? It could be the question and answer. It could be consultation, courses. If you can touch base on that, so that they
Yeah.
can, take a look at that and get their answers.
Yeah. So we have all of the above. So first and foremost, it's forums like this where we have
Okay.
people like yourself, Kuda, who are asking the questions that people want to ask, right?
Yeah.
But sometimes they're embarrassed or ashamed or they feel isolated or they just figure because someone in their community has given them an answer that that's the answer. So first and foremost, we have the podcast. So you can log into my YouTube channel and there's various different topics that we talk about. There's excerpts from conversations like this. There's short form content. The other thing is, as you said, we have the monthly. So the first Wednesday and the second Wednesday of every month, we have the mortgage and property chat, which is an open forum where we just have conversations, we ask questions, we answer questions, and each episode we talk about a different product because not every person that is listening is at the same stage. Some people already have a property now, they're looking to go into property investing. Some people want to do rent to rent. There's lots of different strategies. And what we do is we talk through different things. We're going to be talking through right to buy, we'll be talking through shared ownership, bridging loans, lots of things. So that's one option. As I said, I have my book. Hopefully, it will be out on Amazon by the time this airs or by the time people watch it. It's called A Mortgage is a Really Big Loan. It's by Anthony Lindsay. The information will be in the box. I'll also share my information as far as booking an appointment. But just to drill down on the 12 people a month, the 12 people a month is for our very exclusive Mortgage Ready Challenge. So the Mortgage Ready Challenge is a very hands-on, work directly with myself and my team program where we're going to go through everything. And remember, it's not just about getting the mortgage. If we can save your household 2, 3, 4, £500 a month, that's useful. All right. So the
Yeah, of course.
Mortgage Ready Challenge is about looking at your bank accounts, your finances, understanding how to look at your credit report, understanding how to build credit, understanding how to save money on utility bills, to see potentially if you're renting, if that rent can be reported to the credit reference agencies. My goal is this: to provide objective information from an FCA licensed broker. So I'm not an online influencer where my money is generated from getting people to click on something. That's not
Yeah.
where I make my money. And that's why I provide all of this information for free. The 12 people that we work with per month, that's different because we're working one on one, right? And I imagine, Kuda, you'll have some discounts for your community for people that want to do the challenge. Because if you think about it, if we can save you £200 a month, £300 a month, you're saving that money every month, right?
Of
We'll be
course. Yeah.
talking to people about high interest savings accounts because quite often people are saving the money for their deposit in their current account. So they're getting no interest. We'll be talking about lifetime ISAs. We'll be talking about lots of strategies that will keep more money in your pocket and help you move towards that goal of home ownership quicker based on you. Based on you.
Okay.
So that's why we only do 12 people a month, because we're very heavily vested in making sure we understand each person's individual circumstances, that we can give them the training, support, and guidance that's unique to them and their household.
Absolutely. So you know what? I may not have asked you. We're almost coming to the end of our interview, and I may not have asked you a question, and probably you're burning inside you to say, "Could I? You should have, you should have asked me this question." So this is an open session whereby you can just share whatever you need to share. It could be an inspirational quote or some of the important information that a lot of people miss out there. It could be anything that you can share this time.
All right, there's a couple of things. So first and foremost, my thing is I'm a Christian, and I know that God has placed me on this earth for a reason. And after I turned 50, or approaching turning 50, one of the things that I realized is, because I've had a really blessed life and I found success very early in my life in the music industry, and I did all of the things, and I had a TV show and a radio show, and I did all of those things, but I realized that those things mean nothing. I had
Yeah.
my first daughter when I was 17, and being a child myself, I missed out on a lot of things. So I've, been an assistant vice president at Citibank. I've been a senior manager at several banks. All of those things mean nothing, right? What really is important is spending time with my family, being someone who adds value to my community and to the world, and someone who people can look at and say, you know what, he's not perfect, because I'm not, but he is a person of integrity, and he wants to add value to other people. So that's why we do these type of sessions, and I'm so glad that you arranged this, that we can give people information for free. It may mean you might not like the way I look, you may not like my voice, you may go to another broker, and that's fine. But you'll be going to someone else informed.
Yeah.
Hopefully, from what you brought out at the very beginning, Kuda, you won't go to your bank, you'll go to a broker. You'll go to a
Absolutely.
broker that you can get informed choice. So I would just say, what's for me is for me. Not every person watching this is going to want to work with me, and that's fine. What's for me is for me. I don't pressure people. I'm not a slick salesman. And I genuinely 100% want to make sure people get the right mortgage. There's clients that I've turned away because on paper, they could get a mortgage, but when I really drill down on what's best for them and their family, in my view, I don't think it's the right thing, and so I haven't proceeded. But this is
Uh,
also why every single client, I'll talk to them about life insurance, I'll talk to them about critical illness, income protection, and a will. I'll always talk about those things, because getting in the home is one thing. We want to make sure that you and your family stay in that home, because where you live dictates the other people that your kids are around. It dictates sometimes where you work. And when you come home each night and you put a key in a door, you want to know it's somewhere you want to be. somewhere in a community where you feel valued and you can give value. So I know it's a long-winded answer, but I'm really passionate about what I do, helping people and not just getting people a mortgage. I want to help people get them the home that they can live in that fits what they're trying to accomplish for them and their family.
Absolutely. So now, my last question for you is, how can people get in touch with you? What sort of resources can you put through or details so that they can reach out to you? It could be your website, your socials, whatever you could want to share with the audience.
All right, so I'll share it in the description, but I'm on LinkedIn. I've stopped doing the multiple websites for this, that, and the other because I think by being connected with people on LinkedIn, you can see who I am, what I do. My phone number is 077-235-10236. That's 077-235-10236. My email address is Lindsay is Lindsay, A.Lindsay at charlescrownfinancial.co.uk, A.Lindsay at charlescrownfinancial.co.uk. So I'll have all this in the chat. And, Kuda, you have a vast community. And you and I, we will continue to work together. We'll continue to share information. So people can get in contact with me through you. I'm available all over the internet. I'm on TikTok. I'm on all the platforms. I'm a real person. I'm not some internet influencer. By looking at my LinkedIn, you'll see I'm transparent and I'm very focused on providing a good service in an ethical way that's not going to put yourself in any financial constraints. And also, I've been doing this for 30 years. So like my
Yeah,
license as a licensed individual with the FCA, my license is more important to me than a deal. So
yeah,
I'll
of course.
always do things above board. And the last thing I'll say, Kuda, to emphasize what I said before, I tend to work really fast. So if you come to me and you're saying there's an urgent thing, you found a property, you need an agreement in principle in order to not lose that property, be prepared for me to get that to you really quickly. But you're going to need 3 months bank statements, 3 months pay slips, proof of address, proof of your identification, proof of deposit, and your share code. As long as you can provide those things, I can turn things around quite quickly. If it's going to be a no, or if in looking at things, I don't think I can get you what you need, I'm going to be upfront because I don't get paid unless I produce a result for you. So it's silly for me to string you along and make you think I can do something that I can't if I know I can't. And in that, remember, guys, all brokers pretty much use the same platforms. We go to the same banks, we use the same technology. So the thing that's going to differentiate brokers between and amongst each other is the service. So if you have to chase your broker to return a call, or if you have to chase your broker for information, you should consider if they have time to work with you, because in the purchase process, the whole transaction is as fast as the slowest person. I'll say it again. The transaction is as fast as the slowest person. You don't
Yeah,
want your broker who you're paying to be the slowest person, because time kills deals. The longer a deal takes to go through, the seller gets antsy, says, oh, this person's not serious. They keep taking in other offers, and it can fall out of bed. So make sure you find a broker that you trust, someone's reliable, responsible, professional, and is willing to tell you, the truth and be honest with you.
absolutely. So I want to thank you so much for agreeing to be part of this conversation. I understand that what you've just shared is so much valuable to ourselves, and we're able to get the answers that we need to. So thank you so much, Anthony Lindsay, for joining us.
Thank you for having me.
Absolutely. So to our viewers, please do check out the resources in the description, and I am out now. Bye. Thank you.